Hi, Trent Mell, First Cobalt. We are on the cusp of becoming North America's first and only producer of cobalt sulfate through our refinery in Canada. We've also got a mineral exploration asset in the state of Idaho, and we've recently announced some work on battery recycling, namely processing black mass through the refinery in Canada.
Fantastic. Trent, good to see you again. Haven't seen you since January. How have you been?
Excellent. Busy, happy, and loving the phase that we're at as a company right now.
It's kind of, it is funny, isn't it? So you're busy as anything right now after couple of years of being quite quiet. It's a very different environment, right? Different set of problems.
It is. Oh, that's the commodity cycle that you're in, right? We had a great period, 17, 18, lost a bunch of shareholders, and now they're starting to look us up again. And blessed with a good team, had some good tailwinds, and a bunch of things fell in place. And as we come out of the virus and everybody wants to take holidays, it ain't looking so good for me, but I'm fine with that.
Yeah, don't feel sorry for you, Trent. Okay, no. Just so you know.
All right.
Right. I thought we'd have a catch up because you've got a lot done. Like I say, you've been busy and you continue to be busy. Let's look at it in three ways. Okay, let's look at the operational side of stuff. Let's look at the finance, and then let's look at that big old off-take discussion. Okay, so in terms of the operational side of things, there's a couple of moving parts. So why don't you kind of run people perhaps need to straight through those, please?
Yeah, and so it's not, this is a small project in our industry, in the resource world, right? We're talking 60 million US. There's no big mine, but it's also aided by the fact that we've got an existing facility that ran for a decade, right? Producing nickel, copper, cobalt, silver. But what we need to do is double the footprint. So what that means as a brownfields project is there's no seminal moment where you say, okay, we're a go. It's all happening. So we call it pre-construction. Why? Because we don't have the bulldozers on site. We're not doing new footings and pouring concrete. But meanwhile, we've ordered our crystallizer through GEA out of Germany. It'll be built in America just to deal with logistics risks. We're on the cusp of ordering our SX plant, which is that's at least as big as the facility that's there now. Haven't named the firm yet, but a big reputable firm. So that's happening. The detailed engineering is happening. We've done an inventory of what equipment we're going to reuse. So, we're going from a plant that was 12 tons to one that's going to be 55 through just leach kinetics, but also bigger equipment. So we've got to figure out what can we reuse and what are we going to pull out and just leave off to the side for the recycling strategy. So all of that's happening. Ausenco is still working with us. We haven't signed the EPCM, but it's a bunch of gray, right? And so any day now we'll sort of sign that up and we'll start doing the footings for the building. Into fall. I don't like pouring concrete in winter in Canada, but a lot going on. And the owner's team, I think with Mark Trevisiol, who ran the Glencore smelter in Sudbury. So he's got a process background. Kidd Creek Zig plant. He's ran a custom mill. So a real good handle on the flow sheet. So I would say since our DFS, there are some changes in the enhancements to the flow sheet. We've knocked CapEx. We've increased CapEx. So we're kind of still where we are. I see opportunities in the OpEx to keep improving. Mark has built a team. I think we're up to 5 people now around him. So the owner's team is going to start to grow, and that's going to facilitate, obviously, the transition to operation.
Okay, interesting. In terms of enhancement, so you've shaved some costs and saved some costs, but you've also increased in other areas. Okay, so what's the timing on all of this? When's this thing ready to actually start generating some cash for you?
Yeah, so we've been talking about October of next year. So as you ramp up, so into Q4, right, that material starts coming in through the wet commissioning, and we start producing product. So it's a short timeline. We've got, the permitting process. We got 3 key permits and a closure plan. So, largely amendments to what was already there. One's already in hand. The other 2 permits probably within 60 days. That doesn't really impact us, frankly. We got the permit to take water, which is going to allow us now to electrify, turn the power back on and get some new toilets put in and, running water and Wi-Fi so we can actually sort of operate there. But the timeline is going to move pretty quickly, in terms of the earthworks. But you're not going to see a lot. A lot of it's in the building, and everything happens inside as equipment. So as we round the bend on the end of 2021, then the equipment starts finding its way up the site. And through this year, I guess the catalysts are really around permitting, signing the EPCM, completing the financing, and then it's just the incremental stages of de-risking this process and probably more pilot plant work around black mass.
Okay, so people are excited about that. If you've got enough money for that to actually complete that, have you?
Yeah, so we're really, really close. So when you look at what we've been advertising, it's a 60 million US capex. You can add another 5 million for working capital and contingency, so maybe it's 65. We've got we have 19 million Canadian now in the treasury. I think we've probably invested about 3 million of that already in pre-construction. We've got about 10 million Canadian now investments on the part of the federal and the Ontario government. That was our big catalyst in December that really got us back on the map. We've got an at the market program for up to 10 million. We haven't really done much with that. It's a 6-figure raise so far. And then the residual, the 45 million, we've been working on this debt financing now for a while. Our investors are very eager to see where that lies. And look, the markets are stronger, and so the interest in financing this facility has grown with that. We've got the same lender we've been working with. Secured debt is always a journey, as you know. It just takes a while. The detailed, the legal and commercial was easy. The technical diligence, we're getting some actually great feedback from their engineering firm that they're using, and we're incorporating that in. So very, very soon we will come to market and be able to tell everybody we're fully financed. Now, it's an important catalyst. It's not holding us up. We've got enough in the treasury to keep ourselves going for a while. But obviously, that's a huge catalyst that should have a positive impact on the market.
Will you have enough of the equity left? I know because you talked about for provincial and state, you did a board deal last time we spoke, $10 million. So it's $20 million. So what will you have enough of that left to deal with the equity portion of the build cost?
We will, yeah. And in fact, the government piece is not counted in that sort of 19 now 16 million. That'll come in pro rata with the balance of funding. So. Okay. The timeline looks great. And as I say, the big thing, we've ordered our crystallizer, so there's a deposit on that, detailed engineering. The SX plant, that's a big spend. So once we sign that, there's going to be some stage payment. So that's when I want to make sure we've got line of sight on the funding on the debt piece. So we're not sweating, but we can't wait too much longer either to get that done.
We've seen a couple of companies in the last couple of weeks with regards to when the debt funding gets agreed, and it's like 6 months for them to actually draw down on it. And delays happen, right? You're going to be okay. You're not going to need to go out to market again.
No, we're good. And the delay is what we're living now, frankly. We're dealing, CIBC has been working with us in the process. We're dealing with a big international bank that's known in the resource world. I would highlight, we're not encumbering this asset with a stream or a royalty. So it gives you an idea of the kind of counterparty we're talking to. That was important to us because you don't encumber a 100-year asset the way you would a 6-year gold mine, right? So that took a whole class of investor private equity and kind of push them off to the side. But the waiting is now. It's the detailed diligence. It's the risk committee, all the bank approvals that you need, right? All the compliance approvals they need. Yes, it's coming from the DRC. What if? Where do you get your feed if it doesn't come from the DRC? And where do you put your early product if it's off spec? So we're drilling through all of that, and we've got answers to everything. So it's a journey.
Okay.
But one that's
okay.
Well.
We're going to talk about the feed in a second because there's a few moving parts there. But let's just stick with the ops side of things now. So, do you mind if we just bounce down to Idaho and let us know what you're doing there? What are you focused on?
So, as we sit here today, in the middle of June, you'll probably see a tweet on our feed where we had a mustering point yesterday. The team's mobilizing back to site. So, that's an asset that I love it. I love it. I love the jurisdiction, but I love the asset as well for what it represents. We haven't done much in 2 years. Cobalt price didn't warrant drilling, and drilling's expensive. That's all about to change. So we've got some work going on right now where we're going to engage JDS to do some engineering. I've got an internal PEA at this point because we're sitting right now on kind of 5 million tons of material. I'd like to double that, and I think we can over the next 2 drill seasons. But what we have there today, what we know that we have is 4.8, 4.9. Now this is, to be clear, indicated and inferred. But of high grade material with great continuity. We're seeing intercepts of up to 30 meters. And so I'm excited this year when we get into the mine planning scenarios, right? Bulk mining underground, 3 existing adits. I think the unit costs are going to look relatively favorable. We've got to get the tons up. So this summer is going to be one whereby we, finally get back to drilling, start to grow the resource, but start to define some parameters. What does it look like? What's a 5-year timeline to production up at Iron Creek? And what might that look like from an operational basis? We've locked up a lot of land. We've more than doubled our footprint up there. The host rock, the strike extent of our deposit is now 900 meters. I think we can double that. And then there's just a lot to the east and the west. So we've got all that tied down before the market gets frothy and everybody starts claiming or staking claims around us. We've got that sort of pinned down. And we've got a satellite deposit that we're going to actively target this year with drilling. And so Iron Creek, if I say I want to double the resource, I think we've got other 3 known satellite deposits. One we'll drill this year to start to get a feel for, do we have a district scale opportunity, on our known footprint, outside our known footprint, on our patent, outside our patent. And that's starting to get some inbound calls for some interesting partners and investors.
Well, okay, you say the market before the market gets frothy, and you talk about that the price hasn't been there. I mean, cobalt's a difficult market in terms of spot. It's a very strange way of the way that the numbers are captured and gathered and put out. So, what's giving you the confidence that the cobalt price is going to move?
I think it's just the fundamentals. Yeah, it's just looking through the supply and demand, and if whether it's benchmark or CRU or
but it hasn't really moved much recently. It hasn't really moved much. So where's the confidence coming from?
Yeah, so we had that move really Q4 into early Q1, right? And I caution people if you're going to look it up, LME is not a great source. Fast Markets is the right place to go look for a good quote. So on the metal side, we popped up to 25, then dropped down to maybe 20 or so now. The sulfate, same thing. Sulfate went up to about 30, dropped down to sitting 24, 25. So for us, the relevant market is the hydroxide feed that we're buying, and then the sulfate that we're selling, not the metal, which is what everybody references. And when you look at that, and these quotations are relatively new. They've been developed over the last 2 years through Fast Markets. I guess the one that's publicly available would be SMM, Shanghai Metals Market. You get a pretty good price discovery there. But if you look over the last 18 months, 24 months of the hydroxide to sulfate spread, forget the metal, because that gets weird. You've got consistently a $5.5, $6 margin that's being achieved. And so they do move in extremely close correlation to one another. We published a $2.36 per pound operating cost, add a financing on top of that and some G&A. There's some good margin. That's how we come up with this $35 million USD EBITDA potential on an annual basis from our refinery before recycling or anything else we do.
Okay, you've pressed the green button. How much are you allocating to getting things moving there? Obviously, as you just outlined, you think now's the time to actually start the process. So how much? Back at Idaho. So if we take our 60 million capex at the refinery, and that gets us cash flow positive, the budget at Iron Creek, contingent on a couple of things here. We'll throw a couple of $1 million out this year, maybe more. We'll see, maybe 2 to 3 million. Drill a few thousand meters. Next year is going to be the big drill year, but we'll see how many meters we can put in this year. We were fairly cautious. The first drill campaign we did in 18 was confirmatory of an Noranda historic resource. The second one, we did a bit of step up, but it's mostly infill. We had this hunch that we had a really good continuous deposit, which is not what you would see north of us. A lot of the deposits that you would see or the mineralization occurrences elsewhere in the Idaho belt are high grade, but not very good mineral continuity. And we wanted to confirm that because for a sophisticated investor, this looks really attractive as a mining operation or as a partner. This year now, we've got that. In fact, our grade stayed constant when we infilled. Now that is the time to start stepping out and go a little far, go the 150 meters, go the 200 meters and start to see where this continues. We're open on strike. We're open at depth. So it'll be fun to get that going again. Okay. And what's happening with Kuya Silver then?
Kuya Silver, they've done some, they published results. They've done some drilling. I've seen some pictures. I think they're doing some great work. So Kuya, they bought outright the Kerr Lake area of our footprint up in Ontario around the refinery. And then they've got an option. I think they've got about a month to serve notice that they want an option to exercise on the entire belt, our entire land position. So the drilling they've done, I'm encouraged with what I'm seeing. They've been very deliberate, and they're narrow vein miners, right? Developers, soon to be miners. So they understand the style of deposit, and I like the way they've approached it in following structure, following veins. I expect some good news from them before too long, and we're guiding them. There's a lot of information shared, but they're a pretty smart group. They don't need too much from us, frankly.
Right, but where's the upside for your shareholders with regards to what's happening there? I mean, do you just sit and hold? I mean, what's the strategy? Yeah,
we got a few million in Kuya shares, so we're sitting and holding that, and we're not going to be shareholders forever. But David Stein and his team are doing good work, so we don't want to undermine that either. So we'll work with them, whether we sell it as a block or dribble it out over time. No rush, given where our treasury is. I think that's the short-term upside, I suppose, and that has appreciated for us. The longer term is the JV as they earn in on the larger part of the camp. Kerr has been mined, and this is where they're starting, and it makes sense because there's so much historic mining. They're high grade. The structures are known. Go and figure it out. Go test some exploration theses that they have and that we share with them. But then when they do that, once they go into the rest of the camp, what I call the cobalt central part. So if you picture 100 years ago, you had this booming town of cobalt, silver mines with byproduct cobalt, and then some 30 kilometers to the south, you had Silver Center, which is now forest. But in the middle, there was a lot of overburden over some very similar structural features. And that's what we never had time to do as a company. We went to Idaho and then the refinery. And that's what I'm keen for Kuya to do. So The upside for me is going to be when they start drilling a couple of those Schumann Arch and a couple of those other targets that we had identified. And if we got a 30% carry, then we'll benefit from any discoveries they make.
Okay, so you're a patient shareholder.
Yeah, absolutely. Yeah.
Hey, so talking of patient shareholders, you did a deal with Glencore.
We did. Well, we did. We converted. We made them shareholders, right? So we had $5 million US in debt. So as we were solving for our $45 million, we had to add that $5 million US at Glencore, and we did convert them into shares to eliminate the debt, which was a great thing to get rid of.
Are they obviously you're in discussions around feed and so forth? Does this make the conversation a little bit more difficult or a little bit easier? I mean, how would you position it?
Yeah. So when I look, I mean, Glencore, they've been on the technical side, they've been good partners, right? We're half my team came out of Falconbridge, including Mark Trevisio, who's building the refinery, and my chairman. And so we've had a great exchange, with the Sudbury crew, including XPS, their technology center. When we came to the commercial arrangement, when you and I first started talking over a year ago, it was going to be a tolling arrangement, right? Where they were going to provide the feed and do all the offtake. And we had a window of opportunity for us to put that aside. I think there was a risk-off appetite in the market, and maybe within, I won't speak for them, but maybe within their shop as well. And then we turned it around, and now we're buying from Glencore and we're buying from IXM, indirectly China Moly. And so as a result, now we got full control of the offtake and the product. And so the relationship is still there. It's still a good one, but we're not, take this in the right way, we're not beholden to them. We're not beholden to anybody. And with the tailwinds now there, with the project almost fully funded, de-risked, the phone calls are like, it's nice. I mean, we're getting calls from investors and we're getting calls from the battery supply chain, government agencies, Canada, US. So the credibility is there, and I don't think we need anybody to be successful. Having said that, everybody we talk to is about 100 times bigger than us. So our future is, grow or get swallowed, but I don't worry about it. Like, just build it. Let's create some value, and then we'll worry about that in a year or two once we're there.
Okay, so let's talk about you mentioned a couple of options there for you. You're getting a few phone calls coming in. You've got a refinery, or will have a refinery. People are going to be interested for sure. So taking control is important because you can make decisions. You're not reliant on other people to work out what you need to do. So in terms of this North American ecosystem, which we're seeing with critical minerals and all these, automotive companies trying to, get control of their supply chain. There's contracts out there which, are being signed for 5, 10, 15 years. People are a bit nervous about, especially with cobalt, right? So tell us about the structure that you see you putting in place, because you got to get feed in and you got to sell it and you got to make a margin in between. It's real simple, money in, money out, right? So how are you picturing it in your head in terms of where are you going to get your feed from? Where's your preferred route given? Because I suspect if you're anything like the European ecosystem, people are going to want you to get it from within sort of North America plus friends, right? Mm-hmm. So what are the conversations that you're having? Yeah,
so there's two. There's the narrow story around our cobalt, and then there's the broader story around creating a battery park in Canada. Maybe we'll come to that.
We'll come to the recycling bit and so forth in a minute, but let's focus on the core business.
The cobalt, the next 18 months. And so if you look at the supply chain today, most cobalt's coming out of the DRC, and certainly for the salts business, the battery business, it is the DRC. It's pretty much the only game in town, unless you want to pay extra to convert alloy product and put it into solution to make it into a crystal or a salt form. So our players, our competitors, if you will, is China. That's 80% of the market, and the other is Umicore in Finland. Everybody's buying from the DRC, so we're not going to buck that trend. But what we are doing differently is we're going mine head straight to our refinery gate. So no traders in between, no blending. We can't touch artisanal, and God bless them. I hope we figure that out, but we just can't help with that solution right now. We're buying, there's 4 big operations in the DRC, right? You got Mutanda, which is care maintenance. You got KCC, you got Tenke, and you got RTR. 3 miners operating those. Those are the obvious sources for us for the next few years. It's an easy leach. It's an intermediate product, an easy leach. It grades 30% or more when it comes into our door. It's well known. It's abundant. Now, so this is a question I get from the lender. What if supply has never been interrupted in the DRC through strife and civil war? Copper and cobalt's always flowed, but there are opportunities out there. Longer term, North America, yes. Idaho for sure. Recycling, yes. There are some nickel products we could bring in. So once this plant is up and running, anything's possible. But the easiest path for us to production and the most obvious was to go from the DRC. And so sustainability is key, sourcing, traceability. And other than BMW, who's buying metal, the rest of the OEM world has accepted that there is a right way to get your cobalt from the DRC. We don't like talking about it, so it gets downplayed. They talk about cobalt-free batteries. It's really cobalt-light batteries. So you got a branding issue, but I think the supply chain issues were years ahead of where we were, in 2018.
Okay, I mean, I read about an initiative in the DRC where you've got up to 1 million artisanal miners, right, in the country. It's a lot of people. And they are trying to kind of create a sort of cooperative, as it were. There's a real good initiative there. And I think that should appease a lot of the concerns if it can be delivered properly. I mean, are you hearing anything about that in terms of the way they're advancing it, whether it's being taken up, whether people are accepting it in country?
Yeah, so there is an NGO working on an initiative, the Fair Cobalt Alliance. By memory, I want to say ERG, Glencore, Tesla, VW. There is a good I might be throwing names that I shouldn't in there. I'm not sure, but there's a good collection of heavy hitters that are involved in trying to make artisanal legitimate. And this is sustenance living. So we're not going to get away from artisanal mining. It's just, and Frank, our head of exploration, worked for First Quantum in country. So we got a pretty good handle of the supply chain there. It's just too messy for a small company without a footprint there. So we're going to go audit the 4 big mines and get comfortable and audit our own supply chain and have it done by a third party through the Responsible Minerals Initiative. But yeah, there's the Fair Cobalt Alliance. The other thing, Trafigura is working with the state agency, right, the Gécamines, to try to provide a legitimate supply chain. And a lot of it comes down to, it's like anything, shine the sunlight, right? Get rid of the opaqueness of the intermediate trading houses that are set up in country. As long as you can point back to where the material is coming from, which is why the big guys are looking at, guys and girls are now looking at blockchain. Shine the light, we can make this work. And it's that middleman that we will not go near for exactly that reason.
Okay, so there's for the next 18 months, fine. That's the model you're choosing. How quickly does Idaho or could Idaho replace, or would it be an as well rather than an instead of?
Yeah, I think it would be an as well coming in the door. Idaho might produce sort of 2,000 tons of material per year in a concentrate form. But when I look at Idaho, I see more than Iron Creek. I see more than Jervois. I see multiple opportunities there. And so the dialogue, I guess, that we're having, we're the only real active player in the belt in terms of looking sort of beyond our footprint. 2017, 18, there were dozens of people. So that's why we stake now before it gets frothy. But we're getting calls from copper companies and ESG funds, and people say, like, where do I get my cobalt? And that is the narrative. And I think Idaho can be meaningful, 130,000 tons produced per annum, of which about 100 is coming out of the DRC. That's a big lump if we're producing 2,000 and Jervois is producing 2,000. But now you got 4,000 as opposed to, the other 30 being produced everywhere else in the world, including Indonesia and far-flung places. So if you can see your way to 3 or 4 mines in the state of Idaho, you start to get this idea of a decent North American supply and maybe even regional processing at some point. But crystal ball gazing, probably not a great use of my time. You got to think of these things. I mean, short term, maybe we're 4 or 5 years out before we would see feed come to our door.
Okay, that's where I wanted to get to. Also, with Glencore not being a significant cog, with your new arrangement with them, how do you? I mean, where's the marketing skill set come from? Is there a need, or are people coming to you and, do you know what? Putting a contract together is pretty easy. Yeah. It's fairly standard. Or are you missing out there? Right.
Yeah, no, we're in great shape. So we recently hired Michael Insulin from ERG. ERG, I think they've got they're the second biggest cobalt miner in the world, a big diversified base metals producer, but they're private, so a lot of people don't know them. Michael was their cobalt expert in-house. He's based in Luxembourg, been around the world, knows all the players. He's got a great network in Europe and Asia. So he's our in-house marketing individual. He's got a fantastic Rolodex. And since he's arrived, I spend at least a third of my time on meetings with battery supply chain people, precursor battery makers, the chemical companies, and the OEMs. On an OEM call, keeping you waiting a few minutes before our chat this morning. So He will tell you, one, we've got it all sold already, right? We did that deal with Stratton, which is really, it's a backstop. We have the right to put 100% to them, and then we can draw that down to a de minimis amount. We could sell our product 3 or 4 times over to metal traders. That's not a problem. But the real benefit for us and for our investors is going to be that cornerstone investor or two, well-known brand name in the battery supply chain. And so that's what's happening now.
So how do you explain comments? And this is a question sent in actually.
Yep.
The great Ross Beatty saying there's not enough cobalt round for it to be a feasible component in batteries. And look at someone else saying Biden and the DOE with regards to cobalt and nickel exclusion in battery, it's just going to be designed out. What are you hearing? You spoke to an OEM just before we jumped on this call. Who's right?
Ross is a smart miner and a good capital markets guy. I'm not sure he's a battery expert, and I like Ross, but the cathode has changed a lot, right? The NCM 111, where it was 1/3 cobalt, we can't power the world that way. So we're moving from the 622 to the 811, so 20% cobalt down to 10% cobalt and beyond. We're going to go to 5%, and that's kind of where the next iteration is. It's not easy to get from a 622 to an 811 from a manufacturing perspective. It has to be an inert environment. It's a whole different plant setup. We'll get there, and then we'll go beyond. The raw material purchasers of some of the most ardent anti-cobalt we're going to get out of the battery type companies are telling me we're not there yet. And they're also admitting that, look, the trade-off, the risk reward of taking cobalt out of your cathode completely as opposed to getting it down as small as you can, it's just not worth it, right? Look at all the hand wringing now on nickel. We're going to go to Indonesia. We're going to get nickel. It's not going to be green. It's not going to be friendly. You got deep sea tailings, high energy intensity. The whole ESG framework gets really questioned on the nickel component. So I think the cobalt piece, figure out your sourcing, and the whole dilemma over the branding goes away, because you take cobalt out, 2 things happen. You've got risk of thermal runaway. If you're going to pack that much energy, increasing amounts of energy in a small little nickel-rich battery, well, you got to control that energy density, and that's what cobalt does. And then there's a buildup of dendrites. There's an engineering issue or chemicals issue that cobalt helps present. You can't have a 10-year battery if you got a buildup of dendrites. The efficiency of battery just goes way down. So I think it's a lot of noise. It's a lot of misinformation. And even the talk from auto executives about their cobalt-free batteries, they're not cobalt-free. Look at the patents. There's still cobalt in there. So I think the next decade we're fine.
I agree. We spoke with a couple of German automotive manufacturers, or representatives of those. They are scrambling around looking for supply. They want to sign 10, 15-year contracts. They need everything that's out there right now. So I think there's a little bit of misinformation, a little bit of scaremongery, a little bit of misunderstanding, etc. But it may be, as you say, it's being reduced. The dependence on cobalt is being reduced, and there will be different use cases. But from what the what I'm hearing from these automotive manufacturers, from the horse's mouth, as it were, they need it, all of it. Interesting times.
Yeah, and your point about the OEMs is interesting, because the intensity of the conversations and the frequency of the conversations have suddenly picked up. And that has to do with just Europe exploding in terms of its own infrastructure development. But now North America is and forget, it has nothing to do with the presidential election. This is already coming, right? We're doubling the number of EVs in the market, the models this year. So, it was coming, and now all of a sudden people are like, we got to hurry up, right? We're building cars here. Where's the rest of the supply chain? And it's fascinating to be the first investment on the part of the Canadian government in the upstream of the supply chain. I know we're not the last. We got $3 billion set aside. The U.S. has an even bigger arsenal. But these next 6-8 months, we're going to see some really big announcements, billion-dollar announcements in North America, and it's going to start to have the look and feel of what we see in Europe today.
Okay, well, let's have a look at the next bit. Okay, and I don't necessarily want to get ahead of ourselves. I'm sure you don't want to get ahead of yourself, right? Because you've got a lot on your plate. But battery parks and recycling, it's all part of that ecosystem. What makes you think that you're going to be best placed to be, front running that?
Well, it's part of it's the first mover advantage in our proximity to the U.S. and tariff barriers. We haven't talked about that, but cobalt sulfate coming in from China has got a 26.5% tariff barrier into the U.S.
What is that? Tell us what that is.
That's just it's Trump era trade barriers that were put up against Chinese supply. It's a critical mineral initiative, but even into Europe, I can't remember what the barrier and the VAT and the tariffs into Europe, I think, are 6.5 for Chinese feed versus 0 for us. So we've got some good advantages in various markets, but When I get back to what's happening here in this market, what makes us unique, it takes years to permit a facility like ours. We'll be operating in under 18 months. To get there, and I alluded to this. I mean, to get there, the ideal state for me, end state, is you're not just producing the cobalt, but the recycling is an easy add. If you could start producing a nickel sulfate on the same footprint, then you've got the beginnings of what we call a battery park. That's the precursor plant. And that's the critical step, right? If you can bring a precursor plant and set it up right next to us, then you no longer need to take that cobalt or that nickel and put it into a salt form. You keep it into solution. It goes into the precursor plant. You've saved a step. You've increased your margin. And so this is years out for us, 4 or 5 years. But these are early conversations that we're starting to explore. And yeah, you gotta walk before you run. But this is kind of the long range planning that we're discussing with chemical companies and with government, internally with some of our senior executives.
Sounds expensive. You're going to need some friends.
Yeah. We'll need a lot of friends to get it done. Absolutely.
Okay.
Yeah.
Hey, Trent, well, look, given you kept me waiting at the beginning, right? I'm going to throw you off this call because I got places to be.
Perfect. All right. We'll do it again.
I'm kidding. Well, great catch up with you. I'm glad to see things are moving along so
Thank
well. It'd be nice to see some of this pressure come off your share price. Be interesting to see what the next few weeks are.
Yes. Thanks for pointing that. So I will say that we had one big seller. I won't name them. Nothing to do with our business. They're gone. But our stock in that period went from 39 cents to 29. I think we're up to 32. We'll come back.
I can't
Not at all worried,
begin
but
to
I'm glad
imagine who that could have been. I wouldn't know. If anyone writes in, I wouldn't know.
I'll leave it there. Thank you.
Okay, great as always. Stay in touch. Let us know how you get on. Sounds busy times, exciting times, and I wish you well.
All right, sir. Thank you. Good catch up.